Hey everyone, welcome back to Corporate Decoder. Today we're diving into a shareholder report for a fund that invests in companies with women in leadership. It's about to get interesting. Think Girlboss meets Wall Street, but with a twist. We are looking at the IMPAX Elevate Global Women's Leadership Fund's annual shareholder report covering January to December of 2024. This fund invests in companies that supposedly champion women's leadership. But here's the kicker: this year saw some big changes. They've tweaked their investment strategy. It's not just about following an index anymore. Now they are picking stocks themselves and using a gender leadership score plus ESG, that means environmental, social, and governance factors to guide their decisions. Let's talk money. For every $10,000 you had invested in the investor class, you would have paid $82 in expenses, which translates to 0.77%. Now, how did the fund actually perform? Well, it made money, that's good, but it didn't do as well as the overall market. The report blames this on security selection, meaning the stocks they picked. Apparently, companies with high AI exposure pulled ahead. If you had invested $10,000 in 2014, you would have $21,573 by the end of 2024 in the investor class. But had you simply put that money into the MSCI World Index, which represents a broad range of global stocks, you would have had $25,812. Over the past 10 years, the investor class for the IMPAX fund returned about 8% annually, while the MSCI World Index returned about 10%. The Lipper Global Multicap Core Funds Index, a broader measure of similar funds, returned about 8.10% too, so the fund mostly kept pace with its direct competitors while underperforming the overall stock market. As of the end of 2024, the fund had about $728 million in assets. They held 101 different stocks. And the advisory fees, meaning how much they paid to manage the fund, was $4 million for the year. The portfolio turnover rate was 63%, meaning that over half the stocks were changed within the year. Let's look at where the money is actually invested. The top holdings are NVIDIA, Apple, Microsoft, Amazon, Broadcom, JP Morgan Chase, Eli Lilly, Netflix, Johnson & Johnson, and Cisco Systems. So big tech and healthcare dominate. The sector breakdown shows that information technology is leading the way at 27%, followed by financials at almost 19%, then healthcare and consumer discretionary at 13%. Not much in sectors like utilities or materials, which have much lower allocations. Geographically, it is heavily invested in the US, almost 72%. The United Kingdom comes in a distant second at 6.5%, with Canada in third at 4.4%, and then a bunch of other countries like France and Australia. US stocks comprise over 70% of the investments, while foreign stocks account for 27%. Cash makes up just a tiny bit of the portfolio. Now for the important change they made, which we alluded to earlier. They are no longer following the old index, the IMPAX Global Women's Leadership Index. As of March 28, they are now ranking companies based on their own gender leadership scores and some ESG criteria and using this to select stocks for the portfolio. They are now constructing an investment universe using their proprietary gender leadership score in the MSCI World Index. Moving on to the less flashy but still important sections. The company has a code of ethics that applies to its executives. It's there to make sure everyone plays by the rules and avoids insider trading or conflicts of interest. The fund's audit committee has financial experts, specifically Adrian Anderson, Dorothy Ann Hurd, and Teresa Kong. These people are financially savvy and independent. It's like having a financial superhero squad overseeing the books. For auditing the financial statements, they paid their accounting firm $25,153 for 2024. They also paid $17,680 for tax services, that is for compliance and tax planning. And then there were $3661 in all other fees to the accounting firm. They've included a complete schedule of investments and all the key financial statements in this report. They are making sure to show you where your money is at. Let's zoom out for a second and look at all this information as a whole. This fund invests in companies with a commitment to women in leadership. While the performance has been okay, it hasn't blown away the market, underperforming compared to broader benchmarks. The portfolio heavily favors big tech and healthcare with a strong US bias. The shift away from simply tracking an index may signal more active management and potentially higher returns or higher risk. We will need to see. Some investors might find the investment approach admirable, Others may prefer a fund with broader diversification and lower fees. Ultimately, the fund's success hinges on whether their new criteria for stock picking will deliver better returns while staying true to its values of female leadership and environmental, social, and governance policies. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment below. Until next time, keep your corporate decoders sharp.